If you're looking to get a funded trading account, it's important that you partner up with a firm that is reputable. A firm that's led by a group of traders that have spent decades on trading floors and desks all around the globe. And it's important that when you take an assessment, you follow one with sensible rules that are easy to follow, that promote good risk management skills. Because ultimately as a trader, that's how you're going to succeed in the markets, is with good risk management. And also, you want to be surrounded by a community of traders and have tools at your disposal. And that's what ForexAnalytix is. So in the month of July, if you take a trader funding program assessment, you're going to get a 45-minute consultation with me, Blake Morrow, president of ForexAnalytix. And I'll spend 45 minutes with you one-on-one and talk you through the assessment process. So book your assessment today. I'd like to talk to you soon.
Christy Macro is back row. There he is.
All right. Espresso's
All right,
down.
Devil Dog, you got it. Hey, welcome back and hope you're faring through this heat okay, and have a great interview.
I'm sure he's
Sir,
ready
good morning.
like you, Blake, for the Civil War 2.0.
What I'm ready for is cooler weather. That's what I'm ready for.
Oh, forget about it.
And I definitely have plenty of ammunition at the house, so we're good.
You're ready. I know. Chris too. Chris, you have freeze-dried food?
This is the place you want to be. Mine or Blake's house. If you're in trouble, come running. We got you.
That's right.
You're in Arizona too, right?
Yeah, just down the street from, well, yeah, a little bit down the road from him.
Okay, so you doing the interview sitting outside in the beautiful weather you have there in Phoenix this time of year?
You bet. You bet.
All
Another, 110, 120 day to day. So
Yeah.
all day afternoon in the hot sun.
Yeah. So tell me what's on the docket, what you're paying attention to, if this break in tech and the great rotation is something, you're paying attention to.
You bet.
Okay.
Good morning, Dale, as always. Look forward to our conversations every 3 months. And yeah, it has been a great rotation so far. At least it's been signaled as a great rotation. I went back and I looked in January when we talked. So this is the S&P 500 weekly chart across the top here. Let me try to just make it like extremely obvious that that's what we're looking at here. I got some things that don't matter, just drawing random mountains on my charts because I love the mountains, I guess. So what we have is basically a chart back to pre-global financial crisis, the S&P 500, and it's gone up. The thing that this is just what I really wanted to point out here is what tends to happen is everybody gets worried really early on in a move. And I mean, I really want to take a look at the 2016 era to 2018 or so, when it just kept going. If you lived through that era, we all did, I'm sure, if we're old enough to watch this right now.
That was the Trump rally.
That was the Trump rally. And
started at the bottom there.
It did. It was boy, was it a wild year coming out of the Frank depeg and the commodity situation with China. That whole period from 2014 to 2016 was about 2 years of just indecision, and you thought you were getting going, and then it was just instantly shot down again. And then we get into 2016, the election happened, and we were all kind of, at least in my world, it was kind of a sad thing. Everybody was just like, oh, these two. And I went to bed and I woke up the next day. I was like, oh, okay, Trump won. That was very unexpected. And for me, I don't know. I don't really pay a lot of attention to it, so I'm not going to speak on that. But what happened, the S&P 500 just kept going higher, and it was a simple trend. If you're a trend follower, it was really easy to do. If you're not into trend following, it was it was hard because you had tariffs coming out every, a Trump tweet was a lot of people don't remember how effective Trump tweeting was to move the market around. But if you wake up the next day, it was, back up again, back up again. It
Yeah, I
wasn't
saw
until
a
we got in.
cartoon back then, Chris, where it shows the former president in front of a his computer with charts in the background, making a call about trade policy.
Yeah.
Yes.
All right,
Anyway,
let's go short semis. Let
yeah,
me tweet this about semis.
yeah,
Hopefully, he had a trading team next to him, right? I mean,
yeah. No, it's
Congress
just him.
does, right?
Just him. That's a
Uh,
cartoon. But
Good times.
anyway, everyone was doing it. Okay, Pelosi was doing it too, so
Of
they all
course.
were doing it.
Yeah.
Anyway, so your history lesson, you think we're in a parallel time frame, like we had from 16 to 18?
It's easy to draw that parallel, isn't it? Because it's an election year.
Yeah,
Former President Trump is is
favorite.
part of the, and now the favorite, unlike in 2016, where I think it was a lot less obvious, especially 538 and all those other folks were pretty caught off guard on that. But the point here is that the S&P generally just goes up over time. Yes, we're going to have our good 20 something 30% sell-offs. This was a 19.9% sell-off in the S&P 500, not exactly a 20% sell-off during the Christmas 2018 or Q4 2018 meltdown. So what you get is this tight range on the upside, and then it gets a lot wilder. And so what we had for the last 2 years, basically from the peak of 2021 to basically it was October 2022, October 2023, but it wasn't until about January 2024 when we talked originally. And that's when the breakout just started to happen after about a 2-year sell-off. And in essence, it's just a nice trend. It has lasted for a year and a half so far. The real bottom being in October, but the trend started to kick up in January of 2023. So until something really changes, I wanted to start all my analysis out with this bigger picture of like, okay, what is the trend doing? The trend's doing what it always does. When we spoke in January, it was right around the breakout time. A lot of people had spent the last 2 years taking profits and going short, and had been working for them all the way through. And then it didn't work. And then it started to keep going. So then I take a look at commitment of traders, large specs, which is this next line down below here. It's not a perfect measurement by any means. And I'm so open to being wrong on this, of course, but it's guided me pretty well so far in saying that large speculators, so CTAs, funds, the bigger money in the market, not commercials, so people that have to hedge their billion-dollar businesses or anything like that, but these are people taking directional trades generally. That's a simple way of
they're
putting it.
short, or at least
Well,
not
they're
long.
just they're just not positioned in the S&P 500 in the way that at least the reporting that I'm looking at has said, and it hasn't been this low since 2006. And that was pre global financial crisis, not
right.
for a lot of people. It's, oh yeah, anything before 2010 was financial crisis. But like, yeah, well, we had a pretty good time up until that. And again, it didn't get this low again until 2010. And in 2010 pretty much was the kickoff of the 10-year, let's call it, run in the S&P 500, volatile along the way it was, and we should expect 20 to 30% pullbacks all along the way. But if those are the sort of things that shake you out on get you in a position of saying, okay, this is it, S&P's going from 5,000 down to $100, that hasn't worked ever. And then, so what I'm saying is that there's a lot of firepower still able to come back to the market. And then the final thing that I like to do, and we talked about this each time, this is the New York Stock Exchange advancing issues. So the stocks on the New York Stock Exchange that are going higher. And then this line that we're seeing is actually a 10-week simple moving average of it. So if I was to show the actual thing, so if you go to your trading view and type in ADV, Alpha Delta Victor, it gives you this, which is not useful. And so I just go ahead and hide it, put a 10-week moving average on it. And whenever we get down to below 1400 on the on this thing, is typically either going to be a period of very high volatility, bottoming, which October 2022, March 2020, December 2018 were all big market bottom days. So like that was a crash type bottom. And then that actually put in the low, which is the opposite side to that coin. And until we get down into that area and break below, I don't get to it hasn't been. Yeah, it's pretty.
So you're saying
I'm
when
not
the
too
market,
worried.
the trend is still up, the tactic is what now?
Tactic is to rotate around, find where strength is, as you guys talked about, to keep a market going in duration, it does have to rotate around. It has to share some of that profit. It has to, everybody has to win. And that's been the big challenge, of course, for the last year or two, right? With last decade, I don't know, with all the big names doing it. And I think you guys did a good job of showing always, but showing that rotation starting to happen or has happening. I don't think anybody has mentioned that it isn't happening. Like that probably is not a thing that anybody is even considering. The rotation's happening. We can take a look at, this is generally these are the S&P sectors with crypto, with Tesla, with Berkshire, with gold, a couple of with commodities, ags, and bonds from the beginning of July. And it doesn't the XLK is all the way down here at the bottom. SMH semis are all the way down at the bottom. And if we're to scroll this out, you can see, maybe if we can get to I don't know how far we can scroll. That's kind of what I'm seeing.
GDX is your leader.
Gold, Tesla, Apple, crypto, Berkshire, financials, and energy, just to kind of, it's kind of hard to see because but you can kind of, you can see that the E, which is the big white line right here, the bright line, is really started to turn up. Gold, like you said, crypto, SMH is actually, you can't see it really well because it's been so strong, but that's turning down. And so what I've seen, surprisingly, is the strength in Apple. And if we were to look at, Apple relative to everything else, like Meta, this is a daily chart back to 2017. If we take a look back.
So you're going to get a break to buy Apple. Where would you do it? 210?
So we got long Apple. So it's a rear view looking, but I would believe that being in the trend here is just starting. So Apple has really underperformed Meta, certainly the semis and everything like that. And when they came out with their news on like, hey, this is actually a consumer use for AI, things changed. That changed the conversation completely. And I think that's probably what we're going to see is just a continuation trend on Apple. I do like pullbacks, the area around 220. Of course, there is questionable areas down to the 190. Well, let's just call it 200 level here.
I wanted to ask you, Chris, the skeptics' argument all the way up for a long time has been the concentration, right? Yet that concentration did not stop parabolic move in the market. Okay, so if you're following that principle, you didn't get long, you probably even took some shots at the short side. So and now everyone's talking about the broadening out. So is it possible that because the market could go up with narrow breadth, that this might be a hook, that of course these other areas will outperform? And another way of outperforming is not selling off as much as what you had at the bottom end of the group, the semiconductors. So can this broadening out of the market save the averages if the semiconductors are putting in a major top?
I think, yeah, I think that so if we look at the volatility, you're probably, there's going to be a rotation. The way I kind of look at it is there's going to be a rotation into volatility, lower volatility. So many
lower than we have now.
Well, I'm not talking specifically semis, but I just mean if we look at, like, if I was to throw up a dashboard of volatility and like look at what is trending low volatility, that's where higher amount of capital is going to be deployed.
It's a little defensive.
Well, so we use in the quantitative thing, we'll do this thing called volatility targeting, where if something's trading at let's say a two vol versus a one vol for ease, I'll have a smaller position on the two vol because it's higher volatility. Nvidia, right? If I had $100,000 and I'm going to allocate, I'm going to go and be able to put, let's say, $1,000 into Nvidia and probably $10,000 in something like Costco.
All right, you brought it up. Where does Nvidia have to hold to maintain the integrity of its uptrend?
Let's have a look at that.
Because it hasn't made a new high in a month. So what does it need to hold? 110?
Let me put my I tend to get to I like to look at things.
That looks pretty negative right now, right? Even if
it does not look like a place I want to be.
Yeah, even if it's just an ABC, there's still more downside here.
Yeah. Back to my volatility thing. I try to cover this as simple as I can. This little histogram at the bottom, when it's in blue, that is very high volatility. That's at a 3. If you can see on the side over here.
Yeah.
I want this thing to be, I want to be over in this area getting into these trades. Hindsight, of course, being what it is. I missed almost all of Nvidia personally. Yeah. But there was an opportunity in there somewhere as we kind of dipped down. But so what?
April low.
Yeah. And so what happens when volatility gets this high, it's you really open up yourself to a major market top and a lot of issues when you get into a high volatility market, because the bigger funds that are doing these run on volatility targeting. So as volatility gets higher, they have to lighten their load, and there's mandates of funds that you can't have a position concentrated, 2%, 5%, whatever of your fund cannot be concentrated. So as things go up like this, they have to sell. So who are they selling to? Obviously a lot of the option trading.
Well, didn't you hear they actually had a sale? You could get 10 times the amount of shares now.
Oh, that's right.
Come and get them. And that was the top. That was the top. Come and get them. Yeah. We got Nvidia.
That was right
Nvidia.
Here.
You owned 1 share, now you own 10 shares. Right? The carnival barker out there.
We love it. We love it.
I mean, anyway, so
that was 1999.
So I mean, this led the market almost all year. So I mean, is this at least a chink in the armor? And semis used to be not the bottom of the list, but the top of the list for a long time.
They were. Yeah, I think what I've seen, if let's start from the top of the deck, which is or the stack, which is tech, generally leading. Right. Tech grows at about 18% compounded annually, and it's the highest outside of crypto. It's the highest returning asset class within what we have. Of course, 18%, there's two sides to that coin. Nothing is going to give you 18% compounded without punching you in various parts of your body randomly. It just the higher the returns, you're going to get punched for it because things like this happen. I think again, what's going to happen, it seems like that move on the consumer side from deep tech AI to consumer, we can go back to the analog that everybody's been talking about, which was Cisco in 1999, 2000. I know I was around, Dale. I'm thinking that you were around as well, since you were using chalk-based Forex trading in the pits. We saw it go from, it's all infrastructure, it's all infrastructure, it's all infrastructure. And then everybody was about this broadband expansion and everything like that. You're like, okay, but how does that get to the consumer? How does, all the things that were happening? And I think that's kind of the similar sort of thing that we're seeing here. Yeah, it's great that these A100s and all the, like, I spend 4 to 6 hours a day in using AI coding and doing things, and I'm not normal. So I wouldn't expect many people to be doing that. There is use of AI for sure. And, it's being used everywhere, but how is that coming down to an economy that is going to actually use it? Right. And we saw with Apple a way that it was going to use it. Right. Okay. Oh, that makes a lot of sense. We can see that happening. Siri was the obvious thing that needed to be taken out. Don't start doing things in my office I hate when I say a name of something that's listening and then it starts going and running away. Yeah. I think Tesla also it had just been really fighting for the last couple of years, and Tesla manufactures their own chips, right? Everything they do, they pretty much bring in-house. And Tesla is one of those that is a consumer product as much as, the deep tech side of Tesla is where, much like Apple, I think the deep tech is where the consumer actually gets to play with the bleeding edge of things, whatever your positions are on them.
What are your highest conviction positions going into the next 3 months before we talk again?
Well, before we talk again, I think we're going to, so Apple, Tesla, crypto, I'm financials, and I'm open to energy doing some things.
Okay. That's a lot of ideas. Pretty broad.
The best way, yeah, the best way I can say it is there's a rotation from very high volatility tech that has been leading, and you just buy everything, and Google has the best data set and all these other things, blah blah blah. Meta has the best data sets, and they're going to be the best AI and all that sort of stuff. Moving to consumer and more of the economy coming online, so like Caterpillar, assuming politics kind of go in this route where we continue to onshore and we continue to bring things in. I think that we're going to be more of a US-based construction production, whether we're talking about manufacturing rubber products domestically, which is going to be an
2.6 volatility level bother you at all on the XLF?
It does. It does. This might just be a regional bake short squeeze.
Yeah, because
coming out of which
been going, but they're not in the XLF though, are they?
Oh, no, but I mean, it's financial. Yeah.
Yeah. But yeah.
Yeah.
I was surprised so a lot of KRE outperforming. So yeah.
It had to do it eventually, right?
Yeah, there it is.
Yeah. I personally don't think the small caps are going to continue to do all that good. I think it's just kind of a rotation through for the next 3 months. Next time we talk, I think we're going to get to a point where leading into Q4, things are going to become a lot more clear. Whenever that, it seems to have, a lot of people believe that this past weekend, what happened, that it became very obvious what the next administration was going to be. Indecision was pretty much wiped away. And so, as Glenn just mentioned, the Trump trade is on right now. Once it became obvious in 2016, that's what happened. When it came obvious in 2020, it was really shaky in 2020, of course. But once that cleared up, things took off again. I think we can have, much like in 2012, I'll go back to that one. It was the summer that it became obvious that Obama was going to kind of walk away with it. And that's pretty much when things took off then too. So once the indecision in DC is gone, things pretty much will get taken out. That's my thought. Whether that happens.
Let me ask you this, Chris.
Saturday
why
or
are
not.
you assuming there's even going to be an election?
History.
Okay. All right. Have you ever seen history like we've been seeing here?
Not personally. Not personally.
You're a young guy, though. I mean, you don't remember Grover.
I do not remember Teddy Roosevelt.
Yeah, okay.
I think there were some things like that.
Yeah. Anyway, we'll see what happens over the next 4 months. You do a lot of very interesting work, Chris, and you talk about your coding and your use of AI. For me, to be a client of yours, that would be a huge time saver, and time is just as important, even more so to me now than money. So best way for people to follow up on this that are hearing you live or hear you later?
Yeah, thanks, Dale. PollinateTrading.com is the site. I write a free newsletter, which comes out at whatever pace needs to be written. Sometimes it's video, sometimes it's most of the time it's written. And I got a discount for Face folks. I have a couple of systems. I am about 95% systematic trading. So as far as making decisions and all that, I have about a 5% discretionary trading thing, which is mostly day trading, S&P SPOOs or 0 days. But
a wise
big
man
business
learns how not to trust himself and go mechanical.
It took a long time, Dale.
Diversify. Give me a system, Chris, so I could diversify away from myself.
That's it. That's what this system is.
It's
the
a good
swing
idea.
beast system.
Yeah.
Dale, I couldn't agree with you more. I have a system, the swing beast system, which is basically what you've seen here is just the Berkshire we're in financials, energy, Apple, Coinbase, Costco, crypto. We are just getting started back into. As I will say, last time we talked about, I was quite bullish on crypto. It never did materialize out of the range that it had created, and so
transparency to boot. Chris is saying I was wrong, which you rarely hear in interviews, in tweets on X, or anywhere else. People choke on those words. All right. You have even more credibility now. You have more credibility when you admit and you're not in a revisionist or you just gloss over it for you to say you're wrong, because that makes you real, because everyone's wrong.
Well, thanks, Dale. We certainly are. There's a reason I have so many systematic trades. It's because being
you
wrong
tried
on
it the other way. Your personality wasn't suited for it.
Nope.
Okay. Well, most people's aren't, including mine. So you do good work, Chris, and I appreciate you coming in every quarter and talking to us about your thoughts. Yeah. And you've been pretty right on about a lot of the things you talk about. So, I wish you continued success, and that pips just come chasing you down and overtaking you. And till next time, bro.
Let me say 50% off for everybody here. You can get the swing system if you want. Come there, DM me, text me, or whatever if you don't know how to do it. But use the discount code FACE, FACE. And if you're interested in any of that system, that's for the FACE crowd. You get all that. Dale, as always, Chris. It's amazing to talk to you, sir.
All right, buddy. My trading warrior brother, Chris Stover, everyone. Hope you enjoyed it. Always good to get together and bat the ball around with my buddy.
Yes, sir.
And that'll be a wrap. You could join the team in 13 minutes on the Morning Edge. And I'm sure Chris does this. Don't just count your pips, count your blessings. If you have money to speculate with, you are blessed, because a lot of people don't have money to lose. They have to decide between basic necessities. So consider yourself fortunate at the minimum. And be grateful. You can't be depressed and grateful simultaneously. I know it because I've tried it. You can't. Let me know if you can. Give me your secret. Anyway, guys, have a great day. See everyone to wrap the week. See you tomorrow for TGIF. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.